Hello guys, welcome back. In this video session we want to analyze an asset class, looking at possible point of interest to select a trade from, and of course looking at properties that makes that level high probability. Okay, so this type of session is just a general knowledge market session where we share technical analysis related tips on factors you consider when selecting points of interest. Okay, so we dissect one chart extensively. All right, so with me here is volatility 50. We want to analyze this asset class from the higher time frame down to the lower time frame, looking for a possible point of interest to select a setup from. So what do we have over here? On the monthly time frame, you can see the market is doing nothing but running to the downside. You can see over to this side for the past almost a year now, the market has been doing nothing but dropping to the downside. So based on this idea, possibly we might be sell buyers. Going to the weekly time frame, what do we have? On the weekly time frame, we have the market still giving us a trend line like movement to the downside. The market retraced a little bit to the upside over here, broke structure to the downside, and there was a retracement which tapped into this low end of this order block over here. And once again, the market dropped to the downside, leaving a clean order block range within this level. Right? So we have an order block range over here, guys, where possibly you could have said there's a probability that the market can come to this level and drop to the downside, right? But you can see the market has moved so far. So in a case like this, you can see we also have a breakup block forming within that range. Let's show you that. We have a breakup block forming within that range, right? So as I said, I always say in one of my video sessions, or let me say in my video session, when a breakup block forms, you can expect two things. The market can either tap the neckline of the breakup block and push to the downside, or the market can push into the extreme end, right? So in this case, since we are in the weekly time frame and the market has run down quite for some time, we can expect to see if the market can tap into the neckline. We want to participate there, right? So we take note of that neckline. Let's draw the faded area so that you can take up. Let's do something like this. So if the market can tap into this neckline, we want to see how the market reacts from here. And you can also see we have a fair value gap range inside, right? So now when trading this type of breakup blocks, the things that makes this breakup block high probability when looking for a point of interest is you have to understand when a breakup block forms, you would want to see, first of all, if you want the market to respect the neckline, you'd want to see a fair value gap range within that level. And you can see we have that over here. Right, fair value gap. Then inside the range, you'd want to be able to spot a mitigation block. That is, can you see this? 1, 2. The market broke to the downside. So there was one last buying order block within that range. The buying order block is the last sell candle before the buy candle, right? And you can see it's part of that level. So these three things initially are properties that makes this breakup block high probability, and they are properties of a good breakup block, right? In the sense that if you use it in the right track of market structure, it's going to work for you most often, right? So going to the daily time frame now. Sorry, I have a low battery. Going to the daily time frame, what do we have on the daily time frame? You can see we have the market just trending, right? The recent order block range that was created was this order block range over here. Now when the market created this candle, the next day's candle dipped into that level and pushed to the downside. So there must be something on the lower time frame which we would want to see. Let's go to the lower time frame, 4-hour time frame. So you can see on the lower time frame, first of all, the market created another breakup block over here. Boom, right? The market created that breakup block range. You can see it. The market gave us the breakup block, dropped to the downside. This is your neckline. The market respected the neckline, and now the market dropped to the downside, right? So since the market has respected this breakup block range, you can see there's also a fair value gap range within that breakup block. Can you see that fair value gap range over here, right? There's a fair value gap range which the market tapped into, right? Your breakup block is of course in line with market structure since we're looking for a possible selling opportunity, right? So you can see this caused a break of structure to the downside. So if you want to look for a trade now based on this idea from the weekly time frame, we already even know where we want to participate from. That is, we just want to hold up at this point over here, right? We just want to hold up at this order block, and if the market can get into this point, we'll want to look for a sell setup from there, right? Let's go to the 1 hour time frame. How does it look? On the 1 hour time frame, we have the clean level over there, right? We want to see how the market drops to the downside when it gets to this level. And the properties we can look out for when the market taps into this type of level, we want to look at liquidity. We have inducement over here, this inducement leg. This is a leg that is going to induce traders who are going to sell early, right? And most likely the market will break out this level deep into this point before it sells to the downside. Okay, so basically these are the properties we have. And part of what we look at also, let's go to the 4-hour time frame. We have what we call the advanced market structure model. The advanced market structure model basically is a situation where you see a head and shoulder pattern formation, right? So the head and shoulder pattern formation, when it forms, the high probability point you want to look for a setup, in this case where you want to sell, is the leg. That is when the market gives you left shoulder, head, right shoulder. You want to participate at the right shoulder, and the next level also, if it breaks structure, is higher probability. So you have high probability points, 1 and 2. So in this case, you have left shoulder, head, right? This is high probability, and this is also high probability. Can you see that? And when you're looking for a confluence, you can say, okay, you can mark out a trend line and say possibly the market is trying to respect a trend line like movement, right? Like this and like this, right? So you're saying that maybe if the market can tap into this level, probably you'd want to see how the market sells to the downside, right? You can just adjust the trend line a little bit to our taste. It's a confluence, right? We can do this and see maybe the market will try to respect high end of this, right? Tap into this level, low end over here, and then drop to the downside as much as it can get. Okay, so this is just a brief analysis with regards to this volatility 51s. So we watch out for this level. If the market comes in this point, we want to see how the market moves from there. So that's just the basic concept with regards to this one. Just wanted to give you a brief insight with regards to this asset class and what we're looking out for. I hope the video session was insightful. See you on the next one. Until next time, I wish you good luck and good trading.